morning. Welcome to 3 Minutes of Markets and Money. I'm your host, Lance Roberts. Let's get through the markets here again. Today, Wednesday, is FOMC day. At 2 o'clock this afternoon, Jerome Powell will come out to make his announcement. Will they taper? Won't they taper? What's it going to look like if they do decide to taper? It's a lot of things to consider. One of the big issues here, of course, is that they will probably announce that they will begin to taper their balance sheet purchases with quite a few caveats. Given the fact that we've got weaker economic growth, we've got corporate earnings and corporate profit warnings now beginning to show up in the markets, inflationary pressures, slowing economic growth both globally as well as domestically. Of course, the debt ceiling debate that's going on, having to issue more debt, lots of things potentially that could derail the economy and the markets over the next few months. So expect the Fed to have quite a few caveats in their taper plan, suggesting that, well, if anything doesn't go exactly according to plan, they can stop tapering, postpone it, whatever they want to do. That brings us to where we are in the markets. That's what the markets are waiting on right now. 2 o'clock today is that again. As we saw yesterday, the markets did try to rally early in the morning. Buyers did show up actually early in the morning to actually start buying some stocks. Didn't quite hold on during the day, but volume dropping here fairly sharply, and markets are holding on to the previous lows from Monday. Now, the question here over the next day or so is, can we begin to muster a bit of a rally? Will buyers show up here over the next day or two after the Fed to potentially push the market back up here towards resistance at the 50-day moving average? Now, the big challenge for markets in the near term is going to get above that resistance level. You have the 50, the 20, all right there, sitting a lot of resistance right on top of markets right now. Again, the risk remains also to the downside, down to that 200-day moving average as well. So again, risk is not eliminated from the markets in the short term, but the markets are deeply oversold at this point on both the money flow index as well as the MACD. Stochastics also extremely oversold here, suggesting there is fuel for a bounce. The question will be where that bounce takes us to. Now, let's look at some other markets as well. The FAANG heavy NASDAQ continues to also be below the 50-day moving average. Looks a lot like the S&P, of course. Lots of similarity in top holdings. Again, very oversold here. Volume is drying up. Need a rally in those FAANG stocks if we're going to turn this market around and get a movement back towards previous highs. But as we talked about previously, stay away from international and emerging markets. Emerging markets continue to vastly underperform here, primarily because global economic growth is slowing and global liquidity is slowing. And again, inflationary pressures, what's happening with China, all suggesting that emerging markets is not where we want to be located currently in this market. Also, the dollar continues to strengthen here as money is looking for a safe haven investment at this time. Major international stocks also continue to underperform here. Again, on an asset allocation basis, if you're running a globally allocated portfolio using a normal asset allocation matrix, you're underperforming the major markets this year substantially because of the drag that you're picking up out of international and emerging markets. Another area to look at is small cap and mid cap, which is also remaining under pressure as domestic economic growth is slowing and corporate profits are becoming under pressure moving into 2022. Small caps continue to underperform here. The good news is that they are trying to hold support at the 200-day moving average. Watch that level, a break below the 200-day moving average, and we're going to have a lot more trouble with small caps in the near future. But there may be an opportunity here in the short term for a tradable range. Small caps are very oversold here. You might get a little short-term pop in markets, but I'd be using that pop in small caps to reduce exposure to that area if you've been long small caps here for most of this year. Mid caps look exactly like small caps as well. Again, a lot of that meme stock action we saw earlier this year has really lost a lot of momentum. Mid cap has really not done a lot. 200-day moving average is now caught up with mid-cap stocks. But again, small caps and mid-caps are the most susceptible to an economic slowdown in the U.S. So valuations remain a real problem in that area. And again, this is why we're seeing more money move and migrate towards the safety and liquidity of large cap stocks near term, particularly as we go through this period. Keep a watch on your risk exposure. Let's get through today's FOMC meeting, and tomorrow we'll pick up on where to put our money next if we do get a buying opportunity today.